Looking for a fast-charging, ultra-responsive stylus for your iPad? Meet the 2X Fast Charge Active Stylus Pen, designed for 2018 to 2025 Apple iPads. Take your creativity and productivity to the next level. Click the link in the video description to shop now on Amazon.
Welcome to Bitcoin Bulletin, where we dive into the world of cryptocurrency and explore the latest trends, news, and developments that are shaping its future. Today, we're looking at a fascinating story about a massive transfer of Bitcoin worth $3.6 billion in just one day. On April 9, CryptoQuant reported an astonishing 48,575 Bitcoins were moved to accumulation wallets, marking a record volume since 2022. This massive transfer is estimated to be worth nearly $3.6 billion and has sent shockwaves through the market. But what's behind this sudden movement? The answer lies in the identification of these wallets as accumulation wallets, which are exclusively used for long-term investors or institutional entities. These wallets have not shown any significant selling activity for over 7 years, suggesting that the investors are betting on a pullback to strengthen their position. This is particularly interesting given the current macroeconomic tensions between Washington and Beijing. The market was down 5% due to trade concerns, yet these long-term investors chose to buy in this bearish context, illustrating a countercyclical buying strategy. This operation confirms a recurring correlation. When traditional markets become turbulent, some players strengthen their positions in cryptos, perceived as safe havens. But what's even more intriguing is the growth in the number of wallets holding 10 BTC or more on the same day. A whopping 132 units increased, indicating that heavy investors are repositioning themselves. This signals a renewed confidence in Bitcoin's fundamentals and suggests that the market may be heading towards a long-term bullish recovery. We're joined by Charles Hoskinson, founder of Cardano, who estimates that Bitcoin could reach $250,000 by the end of the year. His forecast is based on several converging dynamics: increased institutional adoption, better structured regulations, and a growing interest from emerging countries in cryptos as alternatives to weakened local currencies. While these massive movements can be seen as signs of conviction, they also highlight the increasing concentration of Bitcoin in the hands of a few major entities. This raises questions about the market's long-term resilience, especially in periods of heightened volatility. The future trajectory of Bitcoin will depend on how these large holders decide to manage their reserves. So, what does this mean for the future of Bitcoin? Will this recent accumulation be the prelude to a new sustainable bullish phase, or merely a defensive reaction to prevailing nervousness? Only time will tell. But one thing is certain: we'll be keeping a close eye on this story and bringing you all the latest updates from Bitcoin Bulletin.